Jason, it's great to chat with you again, buddy. Hope you and yours are doing very well. I mean, yesterday, even on an up day, also the 5 so-called big tech names finished down. First time that's happened in a long time. Does it concern you at all?
Good morning, Brian, and thanks for having me. And I hope you're well, too. So, that doesn't terribly concern us, given it's just such a short period to examine those stocks over. I think the truth of the matter is that these are high quality companies that by and large have weathered what has been a dramatic market drawdown lower. And I think those quality scores for each one of those companies, the secular growth that each one of them enjoy and that enjoyed before the pandemic and will likely enjoy on the other side of this, continue to act as a ballast in the market. Quality has been a place you can hide out in, and it's interesting because these stocks have been winners for so many years and have actually done fairly well in the decline. So you got to wonder what kind of valuation and what kind of premium investors are putting on these kind of companies that have emerged as almost a utility in good and bad times.
Okay, but they're all very different. I mean, we like to lump them in with cute acronyms, Jason. I get it, but they're very different companies. Amazon, I would argue, many of us here in the burbs, we're living on it. I mean, if I owned a box company, I'd be a billionaire right now. But Facebook and Alphabet are very different in a sense because they're advertising companies. And as much as we're all watching TV and on the web, we know this: no new events, no new business, not a lot of advertising. Are you worried about the ad revenues for these companies?
Yeah, it's a great point, and you're right. They all are different companies and worthy of their own merit and judged as individual companies. And as we look at the advertising, for example, we'll see Alphabet report later today, and we own Alphabet. We've been long Alphabet for a number of years. And I think there's no question about it. Ad spending has dropped in the last 4 weeks and will likely see a rough second quarter. That said, a company like Google was tracking a double-digit growth rate at the top line, something on the order of 15 to 20% prior to the pandemic. I think we will see a dip in their spend on digital advertising over the near term. But I think we're also going to see a separation of winners and losers to some degree in the ad space. I think those companies that are offering more targeted ROI to businesses and giving them better reach to the consumer that's now quarantined and is sitting online and sitting on their phones all day, likely have a little bit easier path through this than something like more traditional advertising companies. So we still look to Google to, despite the decline, do okay over the next few months.
And here's the thing about the economy right now that I'm going to bring up with Steve Leisman later, but it goes to one of your stocks, and it's a little bit tough because I get it. 25 million people are out of work. There's a lot of economic fear and uncertainty out there. But I also know, talking to a lot of people, that what they're not doing is spending money. They're not traveling. They're not commuting. They've got if you've got a job, you might have a little excess cash because you're simply not going out to eat, and they're bored and they're spending online. Maybe they Google something and buy it on Amazon. They're using Visa as the back-end transactional platform to do it. And that's perhaps, I think, one reason why you like that stock.
Yeah, beautiful job tying that together, Brian. And that is, I mean, they have strong secular growth tailwinds at their back as, consumers and businesses transition from cash and check over to digital forms of advertisement, digital forms of payment. And, there's no question that they're going to see a dip in transactions over the near term, given the recession, given the global recession. Cross-border transactions, which is about a third of their business, is likely to be down, given that no one's traveling, et cetera. But I also do think that, given the growth in e-commerce and the growth in shopping for groceries and household goods that have seen a boost over the last few weeks, most of those transactions are going through the largest dominant player in that space, which is Visa, both in debit and credit. So we continue to like, over the near term and long term, the fundamentals of Visa operating in a duopoly in what is a secular growth market. So I think Visa will do just fine. And the one other thing that's worth noting is all of this stimulus spending that's happening both at the consumer and the enterprise level. A lot of that is going to flow through Visa's toll booth as well. So we'll see how that fleshes out over the short run.